goes in line with the economic policy plan where the CBN hopes to end inflation by 2020 at 9%. We also saw them going to swing into action by reducing NPR by 50 basis points. And then they have a plan to stimulate liquidity in the system. So if that happens, we're going to see a lot of liquidity generated in the system, and that will help spur lending across the sectors, especially in the agri. And if that happens, we're going to gradually see less dependence on foreign exchange, and then we'll see inflation drop furthermore.
All right, then. So I'd like you to speak on the monetary policy stance of the central bank governor. We've seen that they kind of positioned on some slight easing. So the 0.5% drop in the last monetary MPC meeting. But how do you think, since they're trying to lean towards the growth trajectory this time, how do you think these inflation numbers coming in now would impact their decision going into the next MPC meeting?
Like you said, they want to spur growth. So inflation dropping means that what they have put in the works is actually working, right? So we'll see a lot of policies put in place to try to stimulate lending. And then again, we're going to see a lot of improvement in intervention funds, agri, SME, and all that into the market. So CBN is going to do a lot to actually spur the economic activities in the market, in the system, and then help further drop inflation.
But isn't that doing quite a little bit much when you talk about intervention? Shouldn't they try to focus more, like take the IMF's advice to do more on price stability?
Yes. So how are they trying to do that? We've seen a lot of Nigeria is an import-dependent country, so we've seen a lot of like a lot of monitoring in the FX market where we see them intervening, and then we've seen them looking at what the FPIs are doing and trying to keep rates at double digits so that we can interest and attract the FPIs.
Yeah, well, earlier on we saw quite a number of criticism on the multiple FX rates in the country. But some players are saying, I remember having an interview recently with someone from RENCAP, and he was talking about the fact that he thinks it's a right time for us to unify the rates.
I agree with you that it's the right time to converge the rates. However, if you notice at the intervention windows where they offer rates at different rates cheaper than what is obtainable in the I&E window, they are focused basically on the retail on some sectors, which includes agriculture, plant and raw materials, and petroleum. And that is to help subsidize the rates where the major importation we have coming to the country. That helps to subsidize it and reduce the impact on inflation.
All right, then let's look at other activities coming up in the week. We're seeing this week we're going to have the Treasury Bills primary market auction. I'd like to get your thoughts on what you think, how it's going to be. We have a maturity of about 53 billion coming in tomorrow, and CBN is going to come and roll over all that. It's not a lot of assets that they're going to roll over, so we're going to see, we expect moderation of rates across the tenors. However, there's an OMO maturity of 107 billion. So we, as traders, we're going to be careful what we do, because we hope that the next day that they will offer the 1-year bill at the OMO auction. If that happens, we're going to see a lot of pressure on the OMO bills, where it closed at 13.05. All right, then, but still on the Treasury bills, we've seen it's been quite on a bull run the second week in the second quarter so far. How do you see this sustaining this trend?
The central bank hasn't been very. They haven't come into the system, to the market, to issue OMO bills. So we've not seen a lot of assets like we used to. So we've seen traders take bargain buys on the assets available. Right now, the short end of the T-bill curve is trading at about 10%. The mid is at 13%, and then the long end is about 12.8, 12.9.
So where are investors taking their claim there?
Pardon?
Where are investors taking the claim? Are they in the shorter end or the longer end of the curve?
Okay, so I'll explain. What is happening at the long end of the T-bill curve is because normally it has a stable rate of about 13%, but then that was on the support of the central bank issuing long-dated OMO bills, but that hasn't happened a lot in recent times. So we've seen traders going to the market to make bargain buys on the long end of the curve. However, we've seen sustained supply of Treasury bills on the mid-tenors, keeping the rates at 13% for the mid-tenors or T-bill curve.
All right, but with the maturities coming in, the 107 billion you're talking about, do you think we might likely see the CBN come back to issue more auctions later in this week?
Okay, the market opened this week short at about 50 billion. And if we have an OMO auction, if we have the OMO maturity, I'm not too sure that I'm not sure. I won't be surprised if they don't come into mock-up because of the short end. Yes, okay. Opening.
Now let's look at some interesting developments. We're seeing players are now taking advantage of the commercial papers. You know, why is this happening at this time?
Well, it's an interest rate play, right? Really, where will you get the best of your liquidity, your liability, and where do you think that you can play? So we've seen commercial papers offering yields as high as or even higher than the T-bills, the rates we can get in the T-bills market. So the interesting thing to do, or the wise thing to do, is to play where you're comfortable and where you get better interest rates.
All right, then. Thank you so much for joining me on the show today, Chioma.